All right, Hogue here for the afternoon recap. It's good to see everybody. Very nice Back to the Futures session there. We had Dolby and Kevin taking the more difficult trades in the equities, looking at all-time highs, looking at the market really continuing to push to the upside. The harder things to do is to buy it, so I was very proud of them to see that. It's always, always seems to grind higher until it doesn't. We talked this morning. We saw open interest increasing at higher levels, putting in a new high close yesterday in the NASDAQ. We're seeing that continue today. Volume isn't all that impressive, but that doesn't scare me. We talk about if there's no bad news, the equities just continue to grind higher. Now, we did have Chairman Powell speaking a little while ago, just doing a whole bunch of tap dancing, is what it looked like to me. He did have some interesting things to say, but nothing that has really shaken up the market too much. So we're looking at these markets continuing to push to the upside. If you remember yesterday, we took the easy trade. We took a short in the NASDAQ at the end of the session that ended up stopping us out for a small loss. Today, they took the harder trade. They took the continuation. They took the buying at the highs, and so far are still getting paid on that. I know Kevin T had a nice long. He was looking to even add to that at one point. We had Dolby was long 3 NASDAQ at 21,508. I think he moved to stop the break even. He's going to see if this will just continue to play out to the upside. So what do we look at? Well, we had a lot of overnight longs in this market. We did see a bit of an adjustment in inventory, but did not close the gap. So we look for opportunities in the direction of the gap, which would have us looking for longs. What happened here at the IB highs? So the market opens, looks lower, comes up, takes out the IB high, and really just kind of chops around the IB high. This, to me, is one of the most dangerous markets for me to play because I'm kind of focusing on long above the IB high or short above or short below the IB high. But I know this. So if this happens, and it does tend to happen, everything happens, nothing exactly twice. But when I see this, I know that this market is toxic to me, and I'm better off just waiting for something to change. We saw the market pushing new highs. It has left the previous range. It's holding new highs. If we're going to be long, we're going to be paying higher, but it's the more difficult trade to do and maybe the absolute right thing to do. Look at the S&Ps. S&P is really, again, opening with the gap, unable to close the gap relatively early, has us looking for opportunities for longs. The initial balance broke, and then it did exactly what the NASDAQ did. It just kind of went back and forth around the IB high. When I see that, the earlier I can see that, the better off I'm going to be because I am not going to be playing that. And here's that IB high, 6,085 half. We broke above it, found a degree of support, broke below it, back above it, back below it, back. It was exhausting just watching that, thinking, okay, don't do anything. Something better will come. And it did. We had the pretty deep pullback here at around 12:30, just before really Powell started speaking. Took us back to the 200 session moving average. The low value couldn't take out the previous session low or the IB low. A nice little opportunity for a potential long, a little basing back around the IB high, and then the market continues to try and push to the upside. It's when there's no bad news, the equities have the tendency to continue to grind higher. We didn't hear any bad news. We had Powell speak. Maybe there's some digestion yet that has to do with whatever he said, and the market will continue to grind higher until it doesn't. What happened to crude today? Didn't we? Wasn't it announced at 9:30 Central today that there was over a 5 million barrel draw in crude inventories here in the U.S.? Well, you would think, lower supply might bring prices higher. And as sometimes tends to happen in crude oil, the opposite occurred. Here's that 930 bar. We did get a little bit of a pop, but again, initial balance low, unable to maintain price above it. The next 30-minute bar opens at it, and we start to break. Where did we break to? The late spike base. all the way back here on November 29th. This was where price broke below. We actually did spend some time down there, but we never really became directional. You remember we were kind of looking at, where was that? Got to get to my notes here. Last week's low, really the lower extreme of balance. We're still very balanced. We're still in balance. But when this market broke and left the IB high below the target, obviously now was the late spike base back there on the 29th of November, 68.50. That's why I leave these on the charts. Late spike bases, pullback highs, pullback lows. Amazing how often those levels are targeted. Take a look at gold now. So gold also had a late spike base involved in the session today. Actually, it goes back to the second. It goes back to Monday's session. The late spike base. Where was that? 2660.30. Well, where did the IB low end up today? 2660.50. 2 ticks above that. Opening range, the dead ass low of the session. Buyers opening above of the base of a late spike indicates acceptance of higher pricing. And finally today, I think we really saw some evidence of acceptance of higher pricing. Yesterday, the market opened, put in a failed upside auction, went right back to that late spike base, right back to settlement. Today, we open, leaving the opening range at the low of the session, and we drive through settlement and take out the failed upside auction. We do have a little bit of excess up here, but this P shape indicates of the profile, indicates probable short covering. If we do see an increase in open interest off that level, that would be a little bit more encouraging for continuation to the upside. Because as we were looking at this morning, this market has been very indecisive for the last 7-8 days now. Lots of long wicks on the daily charts, dojis, long wicks, still range bound. But if we did see an increase in open interest off the base of that late spike, we may be able to see this market continue a move to the upside again. ACH, baby, anything can happen. Thanks for joining me for the recap this afternoon. Looking forward to spending some time in Power Hour. We have Coach Dakota, number 2 on the big list. We've got David Green. We've got Jack and myself. Looking forward to having a good end of the day here. Trade well, everybody. And this is Top Step TV. Live trades, live traders, real trading. Let's go.